U.S. stocks extended their rebound on Friday, halting a sell-off that spanned 3 consecutive weeks. The S&P 500 jumped another 1.5%, building on back-to-back sessions of gains, while the Dow Jones Industrial Average soared 377 points. Technology stocks were the leaders, helping the Nasdaq Composite climb 2.1%. In the meantime, Wall Street is anticipating the Fed officials will deliver a third consecutive rate hike of 0.75 of a point later this month. Expectations also include a half-point increase in November and a quarter-point increase in December. Now, in my opinion, at some point, the Fed will realize that it's impossible to contain a supply-driven inflation with rate hikes. Either inflation will not subside, or we're going to have mass layoffs in the employment sector. So watch the 2% inflation target get moved up to a 3% inflation target. If and when that happens, rate hikes will be over, and every risk asset from here to China will be going limit up. Also, to remind you, I'm going on a road trip and will be back in 2 weeks. So while I'm gone, don't lose your patience and don't lose your money. And today we're going to go back to the 20-year monthly chart on the spiders, the SPY. And the close on Friday was 406.60. So again, from the top, we came on down here to near the 50 EMA. We bounced. It came up here and tangled with the 20 EMA, and it's getting reflected off a bit. Now, we may struggle here. We may go up or we may go down. Right now, we're in a 50-50 probability. However, I do think that things are starting to strengthen. We'll see that in the oscillators. Moving on down right now. First, volume, not going to show you too much. A little bit of a bump there, but I don't think we can read too much into that. Here in the MAC, we can. We definitely had the rollover at this point here. We're heading on down with the fast line at that point there, and the slow line here. Once again, that separation is relatively wide, which means volatility. Moving on down into the histogram, you can see that we now have 4 months here of a congestion at that point, so that looks like the beginnings of a bottoming and basing. Now we're so far down at -10, we have a while to go, and during that recovery period there could be plenty of opportunity for volatility. Into the price rate of change, same thing. You can see the cross hatching there with the sawtoothing with the attempt of a bottoming. Right now, the separation from the fast line to the slow line is still, again, relatively wide, leaving room for volatility. Now, into the RSI. This looks good, or let's say this looks better with the bottom there and the movement on up. It's struggling to get above that midline or 50 line, but it is gaining strength, and hopefully relatively soon it will move up and through. It could get reflected back, but I think it wants to head on up. Into the stochastics, and you can see there a little bit of sawtoothing, a couple of fish hooks at that point there. It looks like a very early stage of bottoming and basing, yet we could still go down. Again, right now I'm only giving it a 50-50 probability of heading up versus heading down. So right now it's just caution. Be cautious, have some patience. Into the Williams, once again, it looks pretty decent with that bottoming and basing here, and certainly the uptrend, the move out from that oversold territory, and it looks like it wants to continue struggling its way on up. But once again, since we're still under that midline or 50 line, that does leave room for some volatility and maybe some room for the market to actually stumble. So be careful, be patient. Back on up here to the price chart, and one last look. And as you can see, we're having a bit of a struggle right there, but I think that it is gaining some strength. The market is gaining some strength. It's not strong enough to have a real good move on up. It's possible that we could trickle on up, but at the same time, we could trickle on down. I don't see the probabilities being all that different from a move up to a move down. So once again, just sit on the sidelines, stack the cash, bide your time, and look for the opportunities. And for the next few weeks, that's ChewDog Charts. Thank you.